Intro to Accounting, Mr. Roberts here. Today we're going to look at 6.2 and we're going to get a little complicated, all right? It does. We get a little complicated in 6.2. We are creating adjusting entries. And what I want to say off the get-go here is that you can see in this learning objective is we're analyzing and explaining adjustments for supplies and prepaid insurance. Just remember that. Today, we're going to talk about stuff. We're going to talk about adjustments, but it's only for supplies and it's only for prepaid insurance. Just keep that in mind. We're not adjusting every account that we have, just these two. Then learning objective 4, we're going to complete the adjustment columns of a worksheet. That's going to be just like yesterday, right? But learning objective 3 is a little bit trickier. So this is going to get a little bit wordy. Stick with me. We are going to be kind of traveling back in time to the time where we were doing T accounts and debiting and crediting. And I know that you guys remember that. It's just been a little bit. So you might have to kind of dust off those old T accounts and get back into the swing of it. But we are going to plan adjustments on a worksheet. That's what we're doing today. And it starts out by talking about a prepaid expense. I don't really like this term when we talk about it because we talk about like prepaid insurance. And sometimes we call that a prepaid asset, right? Like we've paid for this asset. Well, essentially what it comes down to is insurance and supplies are intended to become expenses. They just are. That's what happens. I go ahead and I buy 3 pens here and I intend to use them. And I intend to use them in the company. So right now they're assets, but as soon as I use them, they turn into expenses. So when we take something like supplies or insurance, they start out as an asset, but what we really call them is prepaid expenses because we already paid for them and they're going to turn into an expense eventually. That's just what's going to happen. And now that we're dealing with time and we're getting to the end of a fiscal period, what we're going to need to do is we are going to need to record any of those assets that have turned into expenses. So once again, let me get a different pen than this one. There we go. Got 4 pens here, okay? We started out January with 4 pens. And what happens? Well, I use this one here, okay? It's all gone. Can't use it anymore. Well, what happened to that one pen that left? Well, that pen went from an asset, something that we own, to now an expense, something that was used to help us generate revenue in that month. And that goes back to this matching expenses with revenue gap principle. What we need to do is make sure that anything we used to earn revenue, we need to record in that same period that revenue is recorded. So we have all of our sales on the books, right? Well, that pen here has actually helped me earn revenue. So I need to make sure that it's expensed. That's what this whole unit comes down to. That's the big overview picture. And if you scroll a little bit further down here, we go into some stuff that we actually talk about in Accounting Essentials a little bit more. But when we match the income that's earned and the expenses in the same period, it's called accrual basis of accounting. And this is what most companies, I guess if you're going to take anything away, I don't want to teach to the test too much, but like if you take anything away, it's that this is the basis of accounting that most GAAP principles say you need to follow, is this accrual basis of accounting. And what it says is when we earn revenues, we need to make sure that we record any expenses at the same time or any expenses that was used during that time. And when we use those expenses or gain that revenue, we must record it right away. On the opposite side of that spectrum is the cash basis of accounting. And that's a little bit different because you only record expenses and revenues when you receive cash for them or when you spend cash for them. So if, say, we sold some services on account, well, we don't actually record that as a revenue. Now you guys know that we use the accrual basis of accounting because we've already recorded sales. And when we sell something on account, we record that as a revenue or a sales. So we've been using accrual basis of accounting the whole time. The big difference is just all timing, okay? Is when we actually record it. So that's as much as I want you to take away from that because it can get a little bit confusing. There's another term that's kind of hidden here, and it's called materiality. And it might be used to say, how material is this mistake? And what that kind of comes down to is there could be a mistake or you forgot to write something down, and they might ask how material it is. Like, how important is it for our stakeholders to know this information? And a company like Apple could make a $500,000 mistake, but to them that's not material because they're a multi-billion dollar company, right? So a couple $100,000 isn't a material mistake for them. It's not going to make that big of a difference on their financial statement. Now, if Mr. Delgado makes a $500,000 error, is that material? Heck yeah, it is. It's huge, right? So anything more than $100, I would think for Delgado would be a material, something that's material to his business. So that's just kind of a term that's hiding in here, and it's also a GAAP accounting principle. So I kind of gave you that overview here. You can read through this again. I would actually highly suggest it. But what we're doing is we're at the end of this fiscal period, and we are going to adjust these accounts, okay? That's the big term that we have here. It's now the 31st. We've recorded all of our revenues, but now we need to go into a couple prepaid expenses, and those prepaid expenses are supplies and insurance. Now, why? Because we used supplies this month, and we haven't recorded anything, so we need to make an adjustment to that account. Prepaid insurance, did we use insurance for the month? Yes. Have we recorded that we used that insurance yet? No. So now we need to make an adjustment to that insurance. Why do we have to do that? Well, because we use those two things to earn revenue in this fiscal period, so we need to record them down. All right, now it's the real hands-on stuff. That was a lot of terms, okay? But now let's look at recording these supplies or making an adjustment to supplies on a worksheet. So what I want you to look at here is the actual transaction. That is not the actual transaction. Let me unhighlight that. All right, this is a little bit more so what the transaction is, what the adjustment kind of is going to look like. It says on January 31st, so the end of the fiscal period, Mr. Delgado counted the supplies on hand and found that the value of supplies still unused on the date was $90. The value of the supplies used as calculated as followed. So supplies account balance on January 31st. So that means all the supplies that we've had that we began our inventory with and that we've purchased. So the current supplies account on January 31st is $620. Now, from here, we went out and we counted our supplies on hand. We went out there and we said, all right, how many pens do we actually have? And I just am using pens because it's simple, right? How many pens do we have? And we go out there and we count. We go, oh yeah, we have 90 pens left. That's our supplies on hand is 90. So how do we determine what our expense is? Well, what our balance was minus what we have on hand is going to give us our expenses, okay? So that's what we're looking at here. When you look at this number right here, the 620, let me just try something. I don't know if it'll work very well, but yeah, it's going to get a little ugly here with this writing, right? So we have 620. Oh man, that's pretty bad. Let's erase that. Let's get that off the screen. Let's do this instead. So we have 620. Now this 620, this is the supplies that we have on January 31st. this 620 has to go in one or two places, okay? It could still be an asset, right? Which means that we still have it. Or the other thing is it's already gone and we've used it. Okay, so this 620, no matter what, if it's gonna go in one of these two things. So if I go in there and I have $600 worth of supplies on January 31st, what's my expenses here? Oh, this is real weird. What's my expenses? My expenses is 20, okay? If I go in and my assets, and I count on hand, oh, I don't think it'll let me take that off. All right, let's just do it again. And now my assets are, let's say 300. Okay, what does my expenses have to be? Because it has to go into one of these two. Well, my expenses then are going to be 320. Okay, it must go in one of the two directions. We either used it or we didn't use it. All right. So just looking at this, let's take the second example. Okay, let's cross out this one and take this second example. On the 31st, our assets is 620. Okay, but now our supplies here, our supplies balance is 620, but now it's 300. Okay, what we're going to be looking at is what do we have to do to get that 620 down to 300, right? And this is where the T accounts come back into play, right? Oh, well, supplies is an asset. You know, how do I decrease an asset as a normal debit balance? So I must credit it, right? How much do I credit it? Well, I'm going to credit the $320. Okay, so that's what we're looking at here, and that's some of the questions we're going to ask ourselves in just a moment. So let's just scroll down, and it says 4 questions are asked in analyzing the adjustment of the asset account supplies. So the first one is, what is the balance of the account to be adjusted? Well, the first account that we have is supplies, and it's $620. So it starts out at $620. What should the balance be for this account? Well, it should be $90, and it's not right now. So we need to make an adjustment. What must be done to correct the account balance? Well, we need to decrease this amount by 530, right? We need to decrease it by 530. I just want to get these numbers out of the way so they're not confusing. So we need to decrease it, right? Because our balance was 620. Now it should be at 90. What do we have to do? We need to decrease it. What adjustments need to be made? So now when they ask this question, just remember, you're making adjustments for 2 of these accounts, right? Supplies expense and supplies. So what are we doing when we credit supplies? Well, we're decreasing it, right? Because supplies is an asset, has a normal debit balance. So we need to decrease it, we're going to credit it. Supplies expense here is going to be debited, right? Supplies expense is going to be debited. You know, we go up into our stream from that first day and we started looking at these. And remember, expenses has a normal debit balance. Make sure that you're referring back to this because we're coming right back to it, right? And we're going to need to know it. And expenses was one of those funny ones, right? That has a normal debit balance even though it's on the right-hand side of the equation. So there we go. So supplies expense is going to increase and it gets debited. Credit will decrease, supplies will decrease. It's going to be credited. Then we can see exactly how it's adjusted here. Supplies, the adjustment, you see here, the adjustment is going to bring it down. It's going to debit it by $530. What's going to happen? Well, our $530 will be our new supplies expense balance. Then for supplies down here, supplies expense is being debited and it's being increased. I thought that was supplies, my bad. Supplies expense is being debited because it's being increased here. And then supplies had that $620 balance. We need to make the adjustment. So what do we do? Well, what we do here is, and make sure that you're seeing this here. This is the adjustment over here, right? The adjustment is right here, the 530. So we take this 530, we credit supplies, just like it shows right here. And now you almost think about it like a transaction that you're pushing into the ledger, right? Now we need to come up with this new balance, and the new balance is $90. We already know that balance, but how can we figure it out? Well, we can take the difference between the debit side and the credit side, right? So we had $620, we credited $530. Our new balance is $90 on the debit side. So what are we doing when it comes to, so that's supplies, okay? And it might take one or two times running through the worksheet to really get this, and that's fine. That's why we do the practice. Sometimes the concepts and going through it without actually doing it can be a little bit difficult, but it's a good little thing to get your brain clicking so you know what's going on a little bit as well. So next thing is we have prepaid insurance adjustment on a worksheet. Now this is the same exact thing as supplies. The big difference is prepaid insurance isn't going to be something where you have to go and count it like supplies would, right? And if we just kind of look at, I don't know if you're not going to have to do this a whole lot, but let's say prepaid insurance, we bought a year's supply and it was $1,200, okay? And it's January 31st. So what's going to be our insurance expense after 1 month? Well, it's going to be $100, right? Like, we can kind of tell that because we know that if we bought a year's worth of prepaid insurance, it's going to cost us $100 every single month. So the insurance expense would be $100. So it's a little bit easier because you can kind of, if in real life, it's really easy to write off the insurance that you've used because, it goes down in like the same amount every single month, unlike something like supplies, right? You never know how many pens you're going to use or whatever that looks like. So here we're doing the same thing, okay? And I kind of skipped this on the other one because it only shows it in the book, but it'd probably be it's still important to know. So we'll go over it with prepaid insurance. Let's go through the steps. Write the debit amount. It's going to be $150 in the worksheet's adjustment debit column on the line with the account title insurance expense. So once again, we're going to write in the debit amount first. We look at this insurance expense. We're adjusting prepaid insurance, and we're showing that we use prepaid insurance for 1 month. So that's going to be the $150 here. And then we write in the credit. But then what they do here is label the two parts. Now, we do this in the book, but we don't actually do it in the test or anywhere else. And when it comes to adjustments, we should be able to tell that prepaid insurance and insurance expense are connected, okay? We're doing the adjustment for it. But if you look at our previous transaction with supplies, we labeled it A, so you can see where the two, how they're connected, those are two adjustments. Here, we're gonna label them B. Once again, I just want you to be aware of it. It's not gonna be a huge thing though. So on January 31st, Mr. Delgado checked the insurance records and found that the value of insurance premium remaining was $750. The value of the insurance premium used during the fiscal period is calculated as follows. So once again, on January 31st, the balance was $900. We go in there and we say how much is still remaining, because this $900 here, because we haven't had an adjustment yet, right? So we go in there and we're like, oh, well, we only have $750 remaining because they charged us for a month. And how much should we actually use? We find the difference. It'll be $150 as that expense. We go through these 4 questions. What's the balance of the account to be adjusted? $900. What should be the balance for this account? It should be $750 now. Okay. So what needs to be done to correct this? Well, we need to decrease it by $150. So, what adjustment actually needs to be made? Well, prepaid insurance, the one that we were looking at, it's an asset. It needs to decrease, so we credit it. And then insurance expense is obviously an expense, so we need to debit it because that's the insurance expense is a normal debit balance, right? A normal debit account. So there we go. Okay. Same thing. If you need a little bit more time on this, read it over again. Okay. It's perfectly fine. I want you to take your time on it. Oh, I don't know what that was. Can I go back? All right, there we go. And then here it's just talking about proving the adjustment column of a worksheet. So when we get to the end here, because that was all the hard part, all we're going to do is we're going to add up our debits and our credits. But if you look here, you can see that we're now in the adjustment column. That's where we're writing this. So the first step in 6-1, we went in the trial balance. Now we're in the adjustment column. And you can see that we wrote our adjustments here. You see that A is connected to A, B is connected to B. But at the end of this, our adjustments will fall under debits and credits, and we need to do the same thing that we did in 6-1. We need to draw the single rule line showing that we're going to add these numbers up. We need to add those numbers up, make sure that they match, and then write a double rule line underneath it. Let's see. Can I get rid of this? There we go. Alrighty. Global currency, we're going to kind of skip past that. There we go. That's 6-2. Let's put it in practice. All right, so I zoomed forward and went to the working papers here. This is the work together. And I also opened up the book because I think it's important to look at these 4 questions that we had until you really get used to what's going on here, right? So as we get going, we're going to ask ourselves these 4 questions for this adjustment that we have. So it's on April 30th of the current year. Fix It Now has completed the trial balance columns of the worksheet. Analyze the adjustment information given here into debit and credit parts. Record the adjustments on the worksheet. Total the adjustment column. So here we are just working in this little adjustment section. That's it, okay? We are only in the adjustments. And for each of these, we're going to have to affect 2 accounts. Okay, and what are those 2 accounts going to be? Well, supplies, and then supplies expense, and then insurance, or prepaid insurance, and then insurance expense. So let's look at the first thing that we have. Supplies on hand at the end of the month is $75. Let's take a look at our supplies over here. Our supplies was $228 on our trial balance when we filled it out on April 30th. So now that we went back and we looked and we counted our supplies, let's go ahead and find the difference between them. And we need to say, what's the balance of the account to be? Well, let's go through this first, excuse me. So let's go 228 minus the 75, and that equals 153, right? So that's 153. Let's look at the questions on the right and see if we can answer some of them. What is the balance of the account to be adjusted? Well, the balance of the account to be adjusted is 228. What should the balance be for this account? Well, the balance should be $75 because that's what we have on hand right now. What must be done to correct the account balance? Well, we need to decrease our supply account by 153. That's what we just figured out. And what adjustment must be made? Well, let's look at the debit first. We are going to need to debit supplies expense the $153 to make supplies expense correct, up to date. Then what we're going to have to do is, because it's an asset, because it's supplies, we need to decrease it by $153. We need to decrease the supply account by $153. How do we decrease an asset? We credit it. Okay, so those are the 2 things that we need to do here. So let's start out with debiting supplies expense. And that's going to be down here. What I'm going to do is I'm going to type in 153. Next thing I'm going to do is I'm going to go up to supplies. And what do I need to do to supplies expense? I need to decrease it. And I need to decrease it by $153. So supplies has a normal debit balance. I'll go over here and credit it to bring it down. Okay, that's it. That's all that we need to do with that transaction. For the next one, it says value of prepaid insurance is $250. So we need to go ahead and say, all right, what was the value of prepaid insurance? Well, it was $375. Okay, so it was $375. Let's go back up here. It was $375. We go in, we look at our account, or we count our insurance in a way, and it looks like we've used $125 of that insurance. Okay, so what is the balance of the account to be adjusted? Well, let's just look at prepaid insurance. Prepaid insurance is $375. What should the balance be for this account? Well, the balance should be $250. What must be done to correct the account balance? Well, we need to decrease prepaid insurance by $125. That's what we figured out right here. And then what adjustments must be made? Well, insurance expense must be debited. We must increase that insurance expense. Then we must credit prepaid insurance because we must bring it down. Okay? And how do we decrease an asset? We credit it. So let's go ahead and do this one now. So let's go into prepaid insurance. And here, we want to go into insurance expense first, right? Because we always debit first. So the insurance expense was $125. That's what we actually used. Alrighty. And then we have prepaid insurance up here, the asset, and we need to bring this asset down by $125. So our new balance can be $250. So let's save and continue. This is the work together. This is the on your own. So I'll just hit save and continue again and then grade it. And something's off. Dun, dun, dun. Oh, yeah, of course. Of course this is off. We didn't do the whole last step. All right. So once we've completed the adjustments, don't forget the last step, of course. What are we going to do here? We're going to add up these columns because we need to go through that control and make sure that the debits equal the credits. So once again, 125 plus 153 is 278, right? So we would total this here as 278 and 278. You can see here that it is at 278. Dun, dun, dun. All right. Hey, you get to make a mistake every once in a while. And then we're doing the same thing on the on your own. So make sure that you're going in there. Make sure that you do the last step, because actually going through and proving the adjustment columns of the worksheet is going to be very important. Don't forget that when you go through it as well. All right, if you have any questions, please let me know.